Uh, on this video, we are going to try to discuss trading for a living. This is part number one, and we're going to try to go about 15 minutes with this educational. Um, there are many approaches to trading for a living. What I would suggest, which I do myself, is I have only a few techniques that I look for certain trades and setups that involve the technique that I'm going to try to discuss with you. And if you master a couple techniques, you don't need 50 indicators, you don't need, 50 different techniques. You only need one that is reproducible and be able to stick to that method and that technique until you get the stats and the numbers that should support a valid, good technique. So we're just going to talk about the technique part, not the psychology and everything behind it, which is a huge part of trading for a living. As of this recording, of course, this is what I do for a living, and it's a very difficult thing to master and to continue to do for a living because you will have losing days, and hopefully, most of your weeks, though, need to be winning, and most of your months need to be a winning month. So let's discuss some possible trade setups. And my favorite, of course, is I'm a counter trend trader, and I like to trade divergences. What I have in front of me is a 7 range chart, which has a few indicators, very colorful stuff on it. Looks pretty well. That's all well and great, but if it doesn't bring you profit at the end of the day, toss it. Something should not paralyze your ability to act. And so what we're going to do is we're going to try to discuss divergences here. This would be, again, part one. What we're going to try to look for is price first. When the price reacts in a certain fashion, we will then get either a double top or double bottom. So I might be looking right in this section right here, and price doesn't have no beginning really. It just doesn't really have an end because it's pretty much 24-hour trading. However, what we're looking at is a continuum of price making a looks like a minor retracement here in an overall downtrend, as we can see all the information in front of us. So we're going to look at maybe the highest peaks that we can see visibly on the chart here, other than the one way off to the left side here. And so what I'm going to do is I'm going to try to pick out this peak here that stands out and this peak right here. Then I'm going to look down at my indicators and see if the indicators agree that price should possibly be up in that area. And if they do, then I'm not even considering shorting this trade and going short, which would be selling. And I'll just wait for another trade opportunity. It's not a problem. So when we look at the indicators, I'm looking at the MACD line here, and I'm trying to compare that peak right there with the higher peak, or I'm sorry, this peak with the peak straight above it, and this peak right here with the peak above it. And noticeably, you will see that we have an upslope on price. We have an upslope on the indicators, so they are agreeing. There's really no divergence found in this section right here on this MACD indicator. Now the indicator below is just MACD in a different fashion. The histogram underneath it, the bars, actually just come right up under the line that would be over here. So this is the same thing as this over here. What is different is the other indicator I have down here called force index, and it takes accumulated volume as well into the picture. The histogram is the difference on this upper chart between the moving averages that make up the MACD indicator. So again, we're going to look at also the histogram underneath this, and we're going to find that the histogram here was smaller as well than the histogram that is showing the higher price peak above it. So again, there's no divergence on this indicator currently, and that's pretty common with a pullback. You may not find any divergence at all when they're ready to go down. So usually you're going to look for major tops that are very evident on the chart, and they'll show more divergences that may occur. The only other thing we're going to look at here again is the same points with the force index, and we see the histogram on the force index is showing higher, and again we peak down below the zero line, which is a good indication. We always want to see a peak below zero line on a valid divergence. Valid divergences always have a initial peak in the direction showing that price should be there, a cross below the zero line, okay, and then a rise back above, significant rise I like to see after a significant dip below the zero line. Then it crosses back above the zero line, and then we see that the price again has another peak, whether it be small or great, but something that's more than one bar usually is something that's more valid in my opinion. So we would compare this point and we would compare this point once we have a cross below the zero line. Now we have a valid second point. When we look at this second point right here, we notice that it is smaller in this case than this area. So there's a little disagreement between these two indicators currently. One is saying that there is a divergence in price, and one is saying that there is not a divergence in price. I hope you all can be able to see that, you know, this is a downslope where price is upsloping. I have some other indicators that I like to use as well that I might bring into the picture. Not too many indicators, but enough that I like to see, let's say 2 out of 3 of my major indicators showing me that there is a divergence in order to consider taking any positions long or short in the market. So that's one of my favorite setups. Now we're going to look at this bottom that just occurred, and we're going to compare this location right here because it did make a the lowest low that we see on the screen on the MACD indicator, and also we made a pretty nice sized peak on the force index. These are different time frames, so you're going to see a little difference in the agreement of the indicators because one is more of a medium term indicator and one is more of a shorter term 13 moving average indicator. So what we're going to do is we're going to look at this point right here, and we're going to compare it to the lower low, which is to the right of it. Noticing that the line is deeper and more shallow over here. When price is sloping down, the indicator is sloping up. When the indicator is low here, again, price is sloping up. When the force index is showing a low here, it almost is pretty much an equal low on most of the bars over here, where price is pretty well downsloped here. So there's a good chance that we do have a divergence at this low here. We can also bring many other factors into play, which we'll try to go over a couple of those in some of the next videos. I'm going to be out of time on this video pretty soon, so the next thing that we're going to try to go over is we're going to try to go over a educational on what we do on the very next step once we locate a divergence, which we have found here with the histogram and with the line, which is very powerful. So we had a histogram as well that was much larger on this point, crossed above the zero line, then crossed below the zero line, and right here is an indication to possibly take a long position for me, and we'll try to discuss from that point forward how we would handle this setup.